Welcome to Channel AMEC, your insight to the Australian visa system. G'day everyone, my name is Carl Young, your online YouTube visa consultant. Now, are you interested in about Australian migration visa and also study abroad? Why not consider to subscribe to our channel and make sure you turn on the little bell on the side so once we have all the news and update, you'll be the first one of getting all the insights. Okay, now this video, I would like to combine and bundle all the information together and explain for 2020 and 21 what the Business Innovation Investor Stream 1AA-B will be like. I noticed I have done a previous video on 1AA-B and it was in section and different explanation in different parts. So I would like to combine all these parts all together in this most updated 1AA-B visa explanations. Okay, so let's start with the actual immigration website where it obviously if you Google business innovation subclass 1AA and make sure you select investor stream. Now investor stream has been very popular due to the fact that the a lot of business investors, businessmen or investors, they might not have enough time to actually be onshore in Australia to actually conduct potential business ventures. But obviously having a business venture in Australia is great, but some people might not have enough time. So investor stream will be a very good option because all you need to do is you inject 1.5 Australian dollars into a state territory bond and sit there for 4 years in order to be transferred into permanent residency. So there's no more other business venture that you're required to enter into. Okay, so that is why it's very popular. And another thing is it's very suitable for a lot of people like doctors, senior engineers or senior IT professions, accountants and lawyers who has very high income for over the years. They have some cash, legal acquired cash earned, and they put into investments. As long as they have been doing investment for 3 years, potentially they will be able to enter into the 1AA-B investor stream anyhow. So not just for the business men or investors solely. So a lot of people may fit into this criteria. So this visa actually provides you a 4 year plus 3 months. The reason for 3 months is that once the bond mature, obviously it would require to be cleared out of the treasury state territory treasury account into your personal account, and giving you an extra 3 months will allow you to get your permanent residency visa application to be ready to be lodged. Okay, so the main thing that we wanted to go through is the eligibility. So first thing, obviously you're required to be nominated by state or territory of Australian as a government, okay, government agency. So what I will do further on this video, for the second half of this video, I'll be giving you a glimpse of what Queensland, Victoria or New South Wales will provide. Okay, so obviously all the other states will be similarly the same, but these 3 states are the most picked states, and we can do some comparisons. Okay, now this part, owning and managing business and personal asset investments, is the most bulky part. So I would like to go through all this. Previously, my video dissect them into different format, how you can categorize an investment, eligible investment, things like that. If you want to know more detail, you can actually refer to those videos that I previously made. So now these 3 things has to be all ticked. So first thing, you require to prove that you have managed and qualified business, or it's an or investment of at least 1.5 million. So for the at least one of the 5 fiscal year before immediate before you apply. Okay, so if you apply in 2020, so between 2015 and now, you need to pick. You can pick 1 year or 2 or 3 or more that you need to prove that either you and your business, your partner, actually have a combined of at least 10% of ownership interest in the qualifying business. If you operate and own a business. Now, people might not be owning a business, or they might be owning a business and also doing investment as well. So it's all combinations. You can pick one, or you can provide two anyhow. Okay, but at least you need to provide one or the other. Okay, and the other one is that you need to provide that at least that year you are actually managing an eligible investment. Now, eligible investment is defined as in you can invest in bond, stock, real estate, or cash term deposits. Okay, so futures, options, cryptocurrencies are not counted. They are not within the provision of eligible investment, unfortunately. But all the other four are in there, so that's the traditional four. Now that all bundled together, you need to equivalent to at least 1.5 Australian dollars that you are actually managing. Okay, so that can be in stock, bond, cash, or real estate property, and that generates rental investments or rental incomes. Okay, now having the asset is between you and your partner altogether. It has to be above $2.25 million for the past 2 years. Now that including your own residential property. So that your own residential property cannot be counted as an eligible investment, but can be counted as asset. Pretty obvious, and that has to be there at least 2 years. And the final part is that you make an investment of 1.5 million to the nominated state territory's treasury bond. Now that 1.5 is very, very vital, because that has to be unencumbered, meaning that it's not a borrow or from a loan of the bank. So some people ask that if I have a $3 million worth of property sitting somewhere in the world, and then if I ask if I can get a mortgage or loan out of that asset of 1.5 and use that 1.5 to invest for that treasury bond, and that cannot be done. Okay, it has to be unencumbered. So unencumbered means it's not coming from a loan or mortgage. Okay, and then it has to be generated. Now this is the most important part. It has to be generated from a qualifying business. So if you have a business and you need to prove the business has been successful in making money, and once they make the money, it has to be diverted into your personal account as a two-way. One is salary, wage, and the other way is dividend. It has to be. You have to prove that. Obviously, there will be a tax documentation to prove over the year you have been earning money from the business that you've been invested into or you owned as income or dividend. Okay. Now the other part is, so it's or it can be combined, or you can one or the other. So eligible investment. So for example, you invest into stock of equal to $1 million, and over the years, or the past 5 years, it had grew. It become $2.5 million. So the net profit of that stock had generated 1.5 million Australian dollars. So that can fit into the requirements. So people will come and ask, well, all the cash that I got is from my earnings, but not from my business, though. It's from my job. Now that cannot be counted. Or some people say that I've got these cash, but some of them is from a gift from my parents or great parents, or inherited assets. Now that cannot be counted as well. So that's very important, that we need to prove that the $1.5 million are generated from qualifying businesses or eligible investment. So that's the one thing that we need to understand. Now you have to have the right experience. You need to prove that you at least have 3 years of managing business or managing investments. So I don't think that would be too hard, because if you can meet those three up there, it has to be 3 years. So I haven't seen anyone could actually done the above 3 within a year. Well, it's possible, but under the criteria, you need to prove that you need to have at least 3 years of experience. So how we need to do that is that the departmental form 1139A, you're required to complete 3 or 4 times, and each form put it into different year to show that your investment or business profile had grew from the past 3 to 4 years. Now lastly, obviously you need to make that 65-point mark in order to be nominated. But this part is again in 2021. I would suggest that that's the minimum requirement, but if you can meet a higher mark, you can get 70, 75, 85, 100 points, get them all. So as much as you can have to actually get more points, because the higher point, it's actually more preferable by the government. Okay, so that's what the federal government Department of Home Affairs require. Now let's move on to the states. So as I said previously, we will be comparing 3 states, so Queensland and Victoria and New South Wales. So let's go to Queensland. So basically Queensland under the Department of Business Skill Migration Queensland, BSMQ, their criteria is actually, well, is exactly the same as what we had just discussed. So they are meeting the minimum requirement of what the immigration requires. So asset of 2.25, invest in $1.5 million. So that's not much we require to discuss because we have just gone through all that. Now, Victoria is a bit different because this year, obviously, there has been the COVID and the pandemic issues. So there are additional requirements. So let's come down here. In addition to the minimum requirement 1.5 to the Treasury Corporation, Victoria, there is an additional of 500,000 that is required to be invested for at least 12 months after you got 1AA visa, and it can be in Victoria real estate. Now that make sure that it cannot be your own living residential property. It has to be investment property. Any average residential property, if you want to invest in Victoria, in Melbourne, it's gonna be right above 500,000. It could be around 600,000 to 700,000. Or you want to put that 500,000 into a private company, whatever you want to do. So potentially, perhaps a cafe, a restaurant. But then people will go, well, if I'm gonna do that, why not just move downwards to do a 1AA? Correct. So 1AA now is not as attractive in Victoria for a lot of applicants. Not a prefer. Well, I won't prefer this anyhow. And in addition, due to the pandemic, there is an addition contribution that Victorian government require applicant to actually do. So you're required to complete this form, and you need to show that you have additional investment into these industry. Now, all I can say is these industry are all the innovated venture type of industry. So it sounds great, but the risk is high, okay? Unless you're very, very familiar with this industry and you're very, very familiar with the business operation in Australia. Otherwise, the risk on these investment is good but high. You need to assess by yourself. You need to get your own financial advisor on this. Okay, so that's the disadvantage of Victorian's criteria. Now moving into New South Wales. So this is New South Wales website, and it's the least look-alike website. Now I'm not really preferring this website. Anyhow, if we're looking at the investor part, again, it's 1.5 million to the New South Wales Treasury Corporation. Now, if we move into the detail basically spells that the 1.5 to the Treasury bond stays the same, but if you want to go into Sydney, you need to prove that you have an asset that you and your partner own together for at least $3 million. So a little bit more, but it's I personally think it's okay. I mean, 3 million is, if you have 2.25 to meet 3 million is not too hard. So that's the only higher bar for New South Wales compared to Queensland. So in conjunction, I mean, in summary, Queensland seems to be the most preferable, or at least required. But if you prefer a bigger city, I would suggest Sydney better than Melbourne, because Melbourne requires additional 500,000 in addition to a post-pandemic recovery beneficial investment in there. So again, Victoria, Melbourne now is not as preferred as what I would suggest or advise. Okay, so should you have more question or query, more than welcome to leave a comment right down below. And this is for the video today. I see you next video. Goodbye.